Welcome to RISKSA TV. We're reporting from the second day of the PSG conference, and we're speaking to Santam CEO Ian Kirk. Welcome. Firstly, regulation. It's top of everyone's minds here. SAM is a big part of that. We're going to be living in a post-SAM world in 2016. What is that going to look like for product providers like yourself?
Specifically on the SAM side, I think that it's going to give us, on the Santam side, quite a lot of advantage because we're a large, diversified group, and risk-based capital works to our advantage. It makes life a bit tougher for the monoline players where the capital requirements are higher. I think it's a better model for South Africa. It should introduce some discipline into pricing, specifically on the specialist classes, which is necessary. It will probably result in some M&A activity and hopefully a more secure financial environment for the consumer and a better market conduct in terms of pricing discipline around the risk and the capital requirements of that business.
Okay, on the point of M&A, what is Santam's strategy in that regard?
Look, in this country, South Africa, it's a bit tough for Santam. With our market share and the competition regulations, competition commission regulations, it's very tough for us to do any acquisitions of any significance. There are some smaller deals that we can do, and we continue to do those. Most of our activity will be outside of South Africa. We're not impacted by competition laws, but with our 25% market share in South Africa, it's tough for us. So I don't think we are big beneficiaries of the M&A activity that would come out as a result of the SAM implementation 2016. But we'll keep an eye. I think the smaller players will have it much tougher. So there'll be a lot of sort of combination activity around that. Capital needs a return. And if the return can't be achieved, the organizations will restructure.
Absolutely. Tell us about your moves into Africa, where there might be more opportunities for you.
Yeah, look, with Africa, India and Southeast Asia, we just follow really the footprint that's been developed by our holding company. The arrangement we have with them is that they do all the sourcing and they do all the transacting, and we come in at 35% of all the general insurance businesses that they buy. They obviously have a much bigger wallet, and a big wallet is important in terms of a strategy like that. You can't just invest in one or two countries. You need a much broader base for diversification. So that's really what we'll do. We follow the lead. They do all the transacting. They do identify the opportunities, and we assist them in that. And then we use that footprint to develop our specialist businesses and our reinsurance business. So it's a three-pronged strategy: Africa, India, Southeast Asia, our investment, our specialist business, and then our reinsurance business.
Okay.
It's exciting for us. It's a nice opportunity. Very big challenge. It's one thing to be the leading insurer in South Africa. It's quite a different thing to become a leading player outside of South Africa. Some South African businesses have done it. We can be very proud of some of the companies which have achieved success. I'm thinking of South African breweries, I'm thinking of Naspers, I'm thinking of Sasol, I'm thinking of Shoprite. The financial companies, of course, have had it much more difficult. And there hasn't been huge success there. But we think over a considerable period of time, and it needs to be measured over a considerable period of time, we can make some success.
Absolutely. What does this move into Africa mean for advisors here and there?
I think on the advisor side, there's a lot of opportunity. And it's not just for the multinationals. The multinationals are obviously active there. They've put their footprint in place. They are international companies, so it's easier for them. But I also think for organizations like PSG and other intermediated groups which have got scale in South Africa, it does create opportunity. In Africa and in India in particular, there are huge opportunities for intermediaries. Direct is a very popular method, but it's not direct in the context that we understand direct. Direct means that the agents are employed by the insurance companies themselves. They're not independent. And I think that the independent intermediary will develop strongly in Africa and in India over a period of time. And there'll be a lot of benefits to the market as a result of that, and it'll create a lot of opportunities for groups like PSG.
Sounds like exciting stuff.
I think so. And the models are there. It's a case of not rushing it, of walking before you run. understanding your opportunities, understanding what it means to have success, and taking time and having patience. But the opportunity is certainly there. And all of us in South Africa need to look at that opportunity.
Let's hope they do. Moving on to climate change, it was also hit on in the panel discussion.
Yeah.
2 billion rands worth of damage for the
That
industry.
one incident.
Yeah, the Gauteng
Yes,
hailstorms.
West Rand, Pretoria,
Yeah.
yeah.
How is a company like Santam reacting to that, and how can advisors react to that?
You know, we're paying a lot of claims, Christy. We're paying a lot of claims. This is a major issue. The weather now is hurting us and hurting the industry hard. You've seen the industry results. They were badly affected. Okay, so the point is, as you've mentioned, it's how we adapt as an industry and as a company. Now, there are things that we can do. We can't change the climate. We can adapt better. The weather alerts definitely helped us in 2013 over 2012. Our experience with those hail events, our losses were lower in 2013, yet the events were bigger. So we, as a percentage of the industry loss, we took less of the loss than we did in 2012. So the weather alerts made a big difference, and we're perfecting that and we're moving it. We can adapt with our pricing. We can't, for example, charge the East London policyholders for their exposures in Gauteng. It's not right. So we need to improve our pricing. We need to improve on the flooding side, with the geocoding that we've done. We know where the problem areas are. We need to sit with our intermediaries, and our intermediaries need to sit with the clients and say, guys, listen, this is how you got to adapt. And it's not just about having bigger excess, it's also about the mitigation that they adopt. If they want to build a house in a flood-prone area, they're going to have to take some risk themselves as customers. They just can't pass that risk on to us. I mean, we now have absolutely clear evidence of the risks. And you can't cross-subsidize. The good risks can't be charged for the poor risks. So that's just how it is. So we can adapt a lot better, I think, as an industry, and we need to do that. And I think we will do that. And it's just one of those things you've got to deal with. The industry is not going to fold because of climate change. But some players, if they're not careful, might fold.
Sounds like risky business for sure.
Well, that's general insurance,
yeah. Okay, for the advisors that can't be here, what would your top tip for them be?
I think understand the value that you offer to the market. Understand clearly your value proposition and have confidence in that. Understand the segments that you want to focus on. And be confident about the advice that you deliver. And be prepared to charge for that advice. It's not all about price, it's about value. And it's about positioning yourself different. And it's about using the regulation to your advantage and seeing those opportunities and focusing on the segments of the market where you can sustain the position and add value. And there are some obvious ones. On the personal line side, there's a whole new segments have come in. Those segments need advice, even more than the traditional segments. And the commercial segment, is extremely difficult to deliver. Once the commercial business gets any sort of scale at all, it's very difficult for the direct insurers to offer that. So that the intermediaries must focus on those areas and just have confidence and be professional and do the business and do it properly, and the opportunities will remain and will develop. And in fact, we talked earlier about Africa. It's not just a South African story anymore. There are other opportunities as well. So I think the role of the intermediary will be about how to deal with the challenges, but there's also huge opportunity.
Fantastic. Thank you so much for joining us. For RISKSA TV, I'm Christy van der Merwe.